It's Christophe Choo, and welcome to our podcast and video interview today. I'm very excited to have Karl Susman, the famous Karl Susman, who is an industry veteran in the insurance business now for over 3 decades. So 30 years of knowledge, kind of like my 30 years of knowledge in real estate. And he's the president of Susman Insurance here in the west side of LA. He also has a radio show called Insurance Hour Radio Show. So he's my go-to expert when we have questions about insurance. And for many of you that live here locally in Southern California or Beverly Hills or Bel Air, you know we've been dealing with a lot of insurance challenges the last few years, as are many other parts of the country, hurricane areas like Florida, et cetera. But Karl really knows how to demystify the complexities of insurance, both for his consumer clients as well as real estate professionals. And he's also been an expert witness about insurance. And today we're going to dive into the pressing changes in the insurance industry here in Beverly Hills, LA, and California, and how we can, try to navigate that and help our clients achieve their goals of buying homes and keeping their insurance without these exorbitant premiums, right? And I know myself, Karl, I've owned multiple properties, and aside from being canceled a few times because carriers are leaving the state, and if I remember correctly, the ones leaving the state or have left the state already are State Farm, no new policies as of May, right? Allstate, no new policies as of 2022. Farmers Insurance has reduced policies. AIG cut back, and Chubb is also cutting back. So those are the big players in the game. And I know myself, luckily I'm still insured, but I know premiums have gone up, at least from my perspective, 40 to 60% in the last couple of years. And, my thoughts are this has probably started with the big fires we had in Bel Air and all that in the last, 3-4 years ago. And earthquake insurance has also become a challenge. So tell us a little bit about, from your expert opinion, what's been going on and how we can help our clients get insurance that's reasonable, that protects their asset, their biggest asset.
Well, I appreciate you having me on first thing. And you say we've been doing this for 3 decades. You have to also add that you and I were in our teens when we started, right?
That's right.
You have to make sure you add that part in. So yeah, it is definitely a very, very challenging environment. In all these years that I've been doing this is definitely the most challenging market we've seen. And you're correct that most of it started when we had these year after year of what were called, 50 or 100-year events of these catastrophes and these fires. Yeah. And when we're having them year after year after year, the industry doesn't have a lot of time to try and recoup, right? If it happens every 50 years, every 70 years, they can build that into the models and they can make it work. But when you're having something that's happening year over year, it's challenging. On top of that, because of the record levels of inflation that we've been seeing, costs to rebuild have been going sky high. If we didn't even have issues with what it comes to catastrophes happening in California, we would still be seeing unbelievably high increases just based on the cost to rebuild. Construction costs are up, and it's horrible to say it. It's still true. We are still not back to pre-pandemic levels when it comes to materials that are coming in, which still blows my mind. But
I don't think we ever will be. I don't think that's ever going to go down. In my experience, once things go up, they generally never really come down. Right.
I don't think we're going to see those construction costs go down at all. But what I'm hoping to see is that we're going to see it level off to some extent. Now, you mentioned a handful of carriers that are not writing new policies. And I think it's important to make the distinction between not offering new policies and leaving the state. Because there are carriers that have left the state or gone out of business, like let's say Kemper, for example, or CSE. And then when you're looking at a carrier like State Farm, they're not leaving the state. They're simply not offering new policies. And theirs is a unique situation because they just don't have the money. Everyone else is afraid they'll run out of money. State Farm has made their filing with the Department of Insurance stating basically, we have no money. So we need to have rates to be able to adequately cover the exposure we have.
That kind of sounds funny to me because obviously the insurance industry, which is a huge industry that does make a lot of money, not particular brokers, but the carriers. And so when they say, oh, we got no money, they're in the business to make money. They're not in the business to pay claims, right? I remember years ago, I had a flood in one of my apartment buildings. I just called. It wasn't you at the time. I didn't know you at the time, but I called my insurance agent, just asking questions. I said, we had a water intrusion from this and that. Is it covered? He says, no. And 2 days later, they've canceled my policy. It was just crazy without even filing a claim. So So how are you helping clients navigate with this insurance situation? I mean, I know every time we talk, it's like there become fewer and fewer carriers even available, particularly in the hillside areas of Beverly Hills, Bel Air, north of Sunset.
Well, I think in general, insurance carriers do when they do well, they do well, and when they're not doing well, they're not doing well. And what happens in California, because it's a very heavily regulated state,
Right.
anytime an insurance carrier wants to raise premium, they have to show the Department of Insurance the math. They have to basically show them, I'm collecting $100 and I'm paying $105. Can't keep doing this,
Right.
so we have to adjust premiums accordingly.
Right.
So the rates that we're seeing are based on math. It's based on real life. It's not carriers that have just decided, we think we're going to make more money. Carriers that leave California are not doing it to make more money. They're doing it because they're losing money. So it's and I'm not an insurance carrier advocate, blah blah. It's
Right.
not like that.
Right.
My job is to find coverage for my clients, right? So that's my job. And
Yeah.
when I'm at the company meetings and when I go to home office and I'm involved in the process, and they're literally putting it out on the table and they're saying, look, this is what we're collecting, this is what we're paying. We
Right.
need to fix this, right? It's not sustainable. So right now, to your point, carriers that are when there's less carriers writing, you have less competition, and we know what that means, right? And when there's less competition, the prices go up,
Right.
and they were already going up. So what we're finding is that there are carriers that we've never heard of, and I don't want to say anything bad about them, but
Right.
they're either new to the industry or they're small, what we consider regional carriers that used to write just in a little area here or there,
Right.
are starting to try and write more to sort of take advantage of this vacuum. And their rates are very, very high.
Yeah.
And what's the alternative? If you're looking to sell, a gorgeous house, and the option is nothing, right, or something that's incredibly expensive, that's a
Right.
tough decision to have to make. And we've
Right.
been getting squeezed into that position more and more over the last few years.
Right. And I remember, from my knowledge of insurance, which is not that much, but there were always in the past A-rated carriers, right? They were the best ones. And then there were, I don't know if there was B and C, but I remember A-rated carriers. And a lot of times you couldn't get them to insure you. So you'd have to go to maybe a B carrier or C carrier, often what were they called? Surplus lines, like these small,
Mhm.
like, not Lloyd's of London. Is it Lloyd's of London? That's one of the,
Well, surplus carriers by definition are carriers that are not licensed in California. It doesn't mean they're good, bad, small, large. Lloyd's happens to be non-admitted.
Right.
There are lots of companies that are not admitted in California,
Right.
but what that means is they're not regulated as well. So they can do things to policies that don't necessarily, you wouldn't know it, right? For example, if you have a dog and the dog has a history of biting people, all of the carriers in California would say, no, thanks. We don't want to write liability insurance here. A carrier that's not in California can be very granular, and they can say, we're going to exclude dog bites from that dog only, period. So there's a flexibility aspect to it, but there's a premium to it as well. And even the surplus market, the carriers, to your point, that we used to go to when the California market was unavailable or too tight or the risk just didn't suit it well,
Right.
they're even having capacity issues. We will get when we submit applications for clients, and normally we would get something back and it would say this is good for 30 days, something like that. Now the capacity is so tight. When we get that back, it says this quote is valid for 24 hours or market
Really?
condition changes. Market condition changes, which basically means somebody else, another broker buys another policy that
Right.
takes that capacity away.
Right. Right. And nowadays, if I know correctly as well, when you apply to an insurance agent, you can't apply to others because that will affect you, like you can't get insurance, right?
Well, you can, but the problem is if you're, look, we'll be honest, there's just like there's good real estate agents, average and
Right.
not so good. Same thing with insurance brokers, right? You're going to find some out there that you can call. If you call 10 brokers and ask for a quote, half of them will probably just say, we don't have options, right? And in the other half, it's a mixed bag. Some might say, well, I might be able to write a fair plan. And the
Right.
others might say, well, let me check with some of these smaller companies. Let me dig around, right?
Right.
And what happens is the good brokers, the ones that are really going out there and trying to find whatever options are available,
Yeah.
they're going to the same places. There are only so many places to go. So
Right.
it's important to find and do some shopping to find that broker, right? That's really
Right.
going to go to bat. But it
Right.
doesn't make a lot of sense to go to two of them because they're literally going to be going to the same carriers.
Right.
And especially in this marketplace, it tends to create problems with the insurance companies because they don't like to get multiple submissions for the
Right.
same property.
Makes sense. I will say my biggest shock in insurance, I had clients who bought a $14 million new construction home last year. Brand new construction. I mean, everything possible. I mean, new construction and fire sprinklers, everything. I mean, in a new house, it was maybe 8,000 square feet. Um, and of course, they wanted to insure it for the $14 million value that they wanted. So one of the things I discovered is that, first of all, the insurance companies wouldn't cover more than 10 million. That was the max limit. So they had to get, policy for 10 million, another one for 2 million, another one like three policies for the same property. And long and end of that whole thing, I was so, I mean, I told my clients when they were buying, I said, you're probably going to be paying 60 to 75,000 a year for fire and liability insurance. Boy, was I off. They ended up paying $250,000 for that insurance. And then the
Wow.
earthquake was like 140,000. So I thought to myself, I said, this is almost what, 300, so almost $400,000 a year for insurance. Now, my clients were obviously shocked. And, I kind of cashed it. Well, unfortunately, that's just the reality today in California. And, you can either choose to pay it. I mean, that's part of the price of owning an expensive home up in the hills, right? That's just, if you're down in
Right.
the flatlands, you're not going to have quite that issue. But still, it's going to be expensive. But that was really shocking to me at the prices. And other clients that before the fire in Bel Air, they were paying maybe 25, 30,000 a year. And then when they were renewed, it was like 75, 80,000 a year, just automatically like quadruple the premium.
Yeah. Well, what's interesting about it is that, again, before we had this collapse in the industry, there would have been probably, for a risk like that, 5 or 6 good carriers that you could go to. And they would compete, right? And the rates would be nowhere near those amounts.
Right,
But
right,
when you're in a marketplace where the general market is shrinking, and on top of it, you're looking at a large risk, which already had a smaller group of carriers that would write it to begin with.
right,
And you turn around and you put that in a higher than average area for brush.
right.
Now you've narrowed down the scope of what companies are willing to write there so small, you
Yeah,
get those types of crazy prices.
yeah. I tell all my clients, I said, look, even if you're close to Sunset Boulevard or definitely north of Sunset Boulevard, you're in a fire zone, a brush zone. So it's going to be hard to find and expensive. So we still have California Fair Plan, which, if I remember correctly, California Fair Plan is a conglomeration of all the carriers that are insuring in California. They each have to take part of that risk in order to keep selling insurance in California. Isn't that how that works?
That is probably about as good a summary as I've heard a non-insurance person say. I'm very impressed because most people have no idea what it is. It is what happens is to be an admitted carrier in California, you have to participate in the California Fair Plan. And what that means is your market share of property insurance is your other exposure. So in the event that there's a loss and Fair Plan does not have enough money to pay the claims, they
Right.
will go to all of those carriers and based on their market share, they will turn around and they will assess them to be able to be sure that those claims are paid. It's sort of interesting because you hear people complaining and being concerned, rightfully so, about Fair Plan not having enough money in their coffers, and that's absolutely true.
Yeah.
And at the same time, you realize, well, that's sort of like a kid not having a lot of money in their bank account, but their
Yeah.
parents are really rich
Yeah.
because you've got the backing of all of these insurance carriers. They're not, and this is one of the biggest problems, is the insurance carriers are afraid they can't, if they're not going to write a risk that's too, the exposure is too high for brush, and then they go to the Fair Plan, they're actually insuring that risk anyway,
Mhm.
right? So
Right.
it's sort of a never-ending spiral of exposure.
Yeah. And what's interesting is you don't know this, and most people don't know it. When I was, I think between 18 and about 23, when I was first starting in real estate, I worked multiple jobs. One of them I worked part-time. My father was an insurance agent. He had his own insurance agency, mostly life insurance, but also fire and liability. And he was Korean, so he dealt with primarily the liquor stores and markets of the Korean business owners in the Koreatown area. And of course, in 1991 or 92, we had the riots, right? And I remember after the riots happened, I would say probably 80% of his clients, all their liquor stores and markets were all burned to the ground, right? And they were already hard to get insurance, and a lot of them were non-admitted carriers, offshore carriers. And I remember helping him deal with the claims for the clients. A lot of them were not covered because, what I forget what the term was specifically.
Civil disunrest.
Yes, is
Yeah.
not covered in a policy, right? I mean, you think you're insured, you're paying all these premiums, everything, and all of a sudden something like that happens. You think, oh, I'm covered, and then you get nothing because they're not covering you.
Yeah, it's a real problem when people believe they have something that they don't. And again, this
Right.
sort of goes back to my earlier comment is it's like doctors, right? Sometimes you go to a doctor and they're really thorough and you know exactly what's going on, and sometimes you go and it's wham bam, you leave and you don't know what the heck happened.
Exactly.
These days, and this is going to be the trend going forward,
Mm.
instead of having a policy, right, that might be sort of catching a wide net that would just encompass lots of different things. You're going to see more of a granular approach where there's a basic policy. If you want to have this type of coverage, you can add it. If you want to have that type of coverage, you can add it. And this is going to make the process of purchasing property insurance potentially a little easier and a little harder. Easier because you can just get exactly what you want, right? You don't have to have
Right.
coverage for example, we have people complaining because policies have limits for guns. And not everyone has a house full of guns, right?
Right.
We're in California. We have guns, but we don't have
Never even thought about that.
guns,
Yeah.
right? So
Yeah.
you'll be able to pick and choose and not have to pay for something you don't have. That's good. The bad part is if you're going to be working in a situation where you don't have those options explained to you, you're
Yeah.
going to be able to be in a situation where you might think you have coverage like you're saying and you
Right.
don't. So it's really going to be important, buyer beware, that
Yeah.
they talk to someone that they can understand and explain what their needs are and find out for sure what you get.
Right. And I think that's so important to really have someone like you can really trust and really get the information because you get a fire and liability policy and you have contents insurance for your antiques, your furniture, whatever, and you think, oh, that's going to cover my watches or my jewelry or whatever, but not necessarily. I mean, if you have expensive high-end items, you have to provide to the insurance company a list of items that's a specific rider on the policy that says these things are covered because otherwise, and you have to have video documentation, right? Like I have videos of all the furniture in my house, the art, the paintings, the antiques. I have books, which actually they're at the house. They shouldn't be at the house. Like whatever important, valuable things are there so that if there is an issue, you're able to say, okay, this was on the policy. I've got the writer. But I think it's so important. And I think also you mentioning about the cost of construction, that's a really important factor because many people, like my policy, I mean, I don't even know the last time I really looked at really what I know it's replacement cost is often the category, but there's still a limit, right? It could be, 2 million, 3 million, whatever it is, depending on the house. How does someone like navigate? Okay, let's say a house is worth 5 million on the marketplace, but that's for the dirt and the land and location. But they say, okay, we can rebuild this 2,500 square foot house for 1,500,000. That doesn't make sense to me, right? So how do they I guess you have to really have a good agent that they can talk to and really figure out, okay, if there is an issue, how do we cover it, right?
This is probably one of the most frequently asked questions I get when people are really getting down and dirty with it, right?
Yeah,
They're paying, especially in California, because our property values are high.
right,
They might be, and I always use this example. If you have a house and it's a 2,000 square foot house and it's in, I don't want to disparage any city. Let's just say, far off in the desert somewhere, right? It's
right,
going to cost X number of dollars to rebuild.
right,
That same house, if it's going to be, on a bluff in Malibu looking at the beach, it's going to cost a little bit more, but it's going to be costing significantly more to purchase that house than it is if it was in the middle of the desert.
right,
And property insurance, and this is not new, is only going to replace the structure because, like you said, the dirt is there. The view is there. Those things aren't going to go away. You can't
right,
insure those items anyway.
right,
So people need to be able to differentiate between what the market value of their property is versus
right,
what will it cost to rebuild. We have
right,
the opposite problem in other states where
right,
people are saying, "Oh my God, I'm spending all this money. Why am I insuring it? I'm spending $500,000 for this house, but you're telling me I have to insure it for $1 million. Why would I do that?" Well, because in other states, they have the reverse problem, right? Property values are lower, but cost of construction is cost of construction. So
right.
it is very important to know the difference between the value, which includes the land, the market, all these other factors that you know
Yeah,
so well,
yeah.
versus what will it actually cost if that house burns to the ground to rebuild it.
So question for you, is there kind of a rule of thumb, like let's say here in, you know, Southern California? I mean, of course, Riverside's going to be less expensive than Beverly Hills. Let's just say the West Side markets like Beverly Hills, Bel Air, the more expensive neighborhoods. Is there like a rule of thumb that a buyer should think, okay, if I have, a 2,000 square foot house, my cost to rebuild is going to be approximately 500 a square foot, 1,000 a square foot. And I know that can range greatly depending on the finishes. You can have, hand cut mirrored, marble from Siena, Italy, that's going to cost you, $100 a square foot versus, Corian that's, $15 a square foot. So, but is there kind of a general range? Okay, if you're going to insure your house, cost of replacement should be between, 500 to 1,000 a square foot. Is there kind of a general rule of thumb?
This is why it's always nice to talk to you, because you get it. This is one of those things that people don't understand, right? I'll have escrows, right? People that are working in the escrow office, and you think they would understand the concept that we're talking about rebuilding. We don't care theoretically about the loan. The loan is the loan. We'll usually cover that without a problem, but we're looking to rebuild the home.
Right.
As far as a replacement cost goes, it used to be a lot easier, right? Because the costs were just generically lower.
Right.
It used to be you could do a smaller house for $300 a foot, $400 a foot maybe. Now, even the most basic track home you're looking at is going to start. And I'm saying if you bought this house and did nothing to it, at around $400, maybe $450 a square foot.
Right.
And that is higher than we've ever seen, of course. And you add that to the fact that, again, we have carriers that have left, so the carriers remaining have increased their cost per thousand. It's like a double whammy, because not only are we paying more per thousand, we have to also increase the amount of coverage that we have to be able to have sufficient coverage to begin with.
Right. I tell my clients when they think about, okay, I want to buy, like, especially international buyers, like, oh, well, let me buy a tear down and build a house in LA, which is, certainly I've had many clients do that. And like, well, what's it going to cost me to build? And I said, well, that's a very broad question. I mean, I always say you can start like a Home Depot house for $500 a square foot, which probably is even more now, up to, I know people that spend $2,500, $3,000 a square foot to build, because they hire one of the world's best architects. They hire, limestone flown in from, Jordan or whatever. And, that stuff is very, very, very pricey. So it's a huge range. So I think that's why it's important to have a great insurance agent like you and really discuss, okay, this is what I'm buying. These are not your typical Home Depot finishes. These are, level A finishes, not level C finishes. And to get an accurate, you may have to pay more, but if you really want to protect your big asset or one of your biggest assets, then I think that's an important thing to really take time with someone like you that has experience to really help them navigate through what's the right way to go, and what's not to be overinsured, not to be underinsured, but kind of what's that middle ground, right?
It reminds me, I can say this old guy now who's probably my age at the time, but when I first started out, I remember I was taking a continuing education course, right, to keep up my license. And this guy stood up and he was giving the presentation. And of course, this was back before you would just sit at your computer and watch a video, right? And he said, let me tell you something right now. And he had this scratchy old voice. And he said, whatever you insure something for, when there's a claim, it's never enough. It's never enough. And it stuck with me because, of course, then I thought, oh, well, I won't let that happen. But it's almost to some extent inevitable, because when you buy a policy, there's a set of costs and there's a set of things in the house, and things are as they are. But as time goes by and you upgrade, you buy more things, you do more things cost more money, things like that are happening. You end up in this position. And again, I don't shame people for trying to save money. Who wouldn't, right? Like you said, who wants to overpay? The problem is right now, when the costs of construction are so high and people are saying, well, can I insure it for less to save money? It gives me the heebie-jeebies, because I feel like it's just a disaster waiting to happen. And those will be, of course, the first people that will come and say, what do you mean the limestone's not covered? Like you said, we had that flown in. So it's super important. And we're trying to talk, sometimes we'll tell people to speak with a contractor and say, get an idea. Let someone who actually builds homes tell you what it is going to cost. We're not construction experts any more than you are, right? The good thing is some insurance companies now are doing inspections. And this is an interesting one that I think it's worth making a comment on. People don't like to have someone come to their house, right, and inspect their house. What I always tell people is, look, if you have a loss, you want the people that you're going to expect to rebuild your home to know what's there more than anybody, because that's your protection. That's what's going to give you the ability. If they come and inspect it and say $600 a foot, and there's a loss the next day, and they say not enough, you can very easily come back and say, I'm sorry, you were here. You told us what to insure it for. So I try and encourage people to ask for it if they're not already doing it, to have their insurance company come do an inspection so they can be, I say, on the hook. They can be aware of what's there and try and help you, guide you through what the amount is that they would see as being necessary to rebuild it.
So question for you. So a client's buying a new house or a house, and you get in a policy with you for, whatever the premium is. Once it's insured, and I never heard about that before. You recommend that they call the insurance carrier to come out and do, because if they send their people out there to do an inspections per se, then they have a written record. So then there's some documentation to protect you down the road. So
Precisely.
I remember I've had a lot of clients that build houses, and I remember one of the houses, it was a 30,000 square foot house, but it was this is what, 5-6 years ago. It was $1.9 million just for the cost of the doors and windows. They were Italian doors and windows, which when I saw the invoice, I'm like, $1.9 million for doors and windows? I mean, these are not, Home Depot doors and windows, but
right.
That's something that may or may not be factored into their thought process of getting insured. And also, I think deductibles. I think a lot of people don't understand the deductible situation. I mean, do you get a 10% deductible, a 15% deductible? Because obviously, the higher the deductible, the less your premium. But you have a $2 million loss and your deductible is 15%. You're out 300 grand because you're writing that first check for 300 grand to the contractor to rebuild the house, and then the insurance company will pay the balance of the 1.7 million or whatever it is, right?
Right. Most property insurance policies have a deductible amount, a dollar amount versus a percentage. Earthquake insurance policies, they tend to work more on a percentage avenue. But again, like you're saying, that's a huge cost saver. And again, when people have a home like you're describing, if they're building a 30,000 square foot house and they're spending $1.9 million on doors and windows, this is the type of person that might say, you know what, I would handle anything other than probably a complete loss, right? Yeah. They would handle that. And back in the day, there would be, again, 5-6 carriers that we'd be able to go to and have the conversation and say, they want full replacement costs, but their deductible, in essence, you won't see anything unless there's a total loss. Right. And you're able to customize something that way. Right now, impossible. I mean, there literally just is not the appetite for that. And I suspect homes like that are not in the middle of the city either, right? There's somewhere that are in the hills as well, which makes it even more challenging. And
there's been a term that's been thrown around the last 12, maybe 2 years, self-insuring, which I know is not good for you as an insurance agent, but where buyers, I have not had anyone do it so far, but where buyers are like, I don't want to spend these crazy premiums. I'll just self-insure. What are the potential chances of a fire? Or, I mean, earthquake is a little bit different because that's something that just, fire maybe less of a chance, but earthquake, I mean, we're in Southern California. It's just, we know it's going to happen at some point in time. Even the last couple earthquakes, I didn't make any claim, but those last couple earthquakes, they were only like 4.6 or whatever. Our remodeled bathroom from 2 years ago, my wife was like, this cracks all over the bathroom from the earthquake. And it's like, I'm not going to call the insurance company and make a claim. I'm going to just pay for it, right? And that seems to be, I think, a lot of us, when we do have issues, I don't want to call and make a claim because it's going to bump up my premiums. They might cancel me. I've had that happen before. So it's just, it's stressful. And I think to myself, why am I paying all this money for insurance? Because if there is a claim, I can't even make a claim because I'll be canceled. So I don't even know what the answer is.
Well, right now, it's a time where, again, because the market is so tight, again, in the past, if there's a non-renewal of a policy, we would shop and find something else. Not a problem, right? But because the market is so tight and there are no places to go, we are advising people, that, again, to really try and be selective if they're going to be putting a claim in. And what happens is, and this is something that people don't all necessarily understand, so I'll take maybe 10 seconds on it. If you put in people say, well, I put in a claim, I get non-renewed. Okay, well, typically, if that happens, what's happening is there's a claim that happened because of something that was not being properly maintained, right? So now, instead of being a client that they've looked at and the house is good and everything is fine and dandy, now they have a clearer picture that this is someone that's not, let's just say, maintaining their roof. So a storm came and it leaked. So what will happen is you'll receive a non-renewal notice. What people don't understand is all they have to do, because in California, the carriers must say why they're non-renewing you. They can't just say, no, we're done.
Yeah.
They have to tell you why. Yeah. And if it's because of the claim, because of the roof in this example, well, you're going to want to replace the roof anyway if it just leaked, right?
Right.
And if you have that work done, they will gladly keep you as a customer. But the problem is that, again, people don't have that dialogue, right? It's sort of a one-way street. They look at the carriers as the, big as the man, right?
Yeah.
And they don't realize that they have a lot more power if they just take advantage of the fact and be a little bit logical. If you're concerned about the roof, tell them you'll fix the roof. Problem solved.
I'll say one thing. I mean, before I met you, my wife, one of our properties that my wife is more in charge of, it's hers. We were with farmers. And they sent a letter. They did an inspection and said, "Oh, you need to replace the roofs on." It was a duplex, two houses on a lot. You need to replace the roofs on both. So we did, at a cost of $45,000 for 2 new roofs, right? And then a month.
This was a long time ago.
This is maybe no. It was a small property. Maybe 2-3 years ago. And we did that. Provided them the documentation, the receipts, the permits, everything. 2 months later, they canceled us. Farmers.
Yeah, I mean that's a failure of a broker at Farmers, because that's not the process, right? If they say something needs to be done and you do it and you provide the documentation, you're good to go. We do that every day.
Yeah.
So, again, especially these days, because it's not, again, if the market was more open, hey, you know what? We'll shop around. If there's something better, we'll move. If not, we'll tell them you need to get this work done, and we can have that dialogue. But right now, if you're getting a non-renewal notice, and a lot of people are, right, find out what it is, what they need to have done, and get a hold of them right away and tell them if you're willing to do it or not. Because we don't have the flexibility to be able to go back and say, oh, come on, it was just a small leak, right? The carriers, because they're running so scared and because they are losing money versus making it, if they have something that has already cost them more than they're collecting, unless they're able to remedy that situation, they're not going to stay on the risk.
So by law in California, if you get a non-renewal notice, they have to give you a reason why?
Absolutely.
I did not know that.
Absolutely. Yeah. And most people, they don't, or they think that, okay, there's the reason, now what? Right? They don't realize that, again, sometimes logic will win out.
Right.
If they're saying the problem is XYZ and you're willing to correct XYZ, look, the carriers want to have you, right? If you're going to correct the problems that are leading to losses, they're happy to have you.
Right.
And people sometimes will do the work, never tell the carrier, and then they'll contact us and say, I was non-renewed, I did all the work. And I said, well, didn't the carrier keep you then? And they said, I never thought to ask. I hear that at least once a week.
So question for you. We had, again, before you, our house was Farmers, which we still have, but our earthquake was also Farmers, but they stopped the earthquake. Are they out of earthquake in California now, Farmers?
Well, in California, there's a law that says if you offer property insurance, you have to also offer earthquake insurance. And what Farmers does, and Allstate, State Farm, Mercury, Safeco, a lot of the larger carriers, they are what are called CEA participation companies.
Yes, I was going to ask you about that.
Right. So they offer
Yeah.
So they offer earthquake insurance, and they follow the guidelines of having to offer earthquake by offering a policy through the CEA. So
actually,
Farmers per se
ours
isn't writing it.
It's Farmers via CEA because it still comes through the Farmers people.
Correct.
But is the CEA kind of like the California Fair Plan? Is it a similar type of thing?
It's funny because it's not. Whereas the Fair Plan has the ability to go back and get the assets of all of the carriers in California,
Right.
CEA does not. The CEA is its own little entity, and you'll see premium on the CEA fluctuate greatly depending on where the property is. Some people say, oh, it's always the cheapest, and then someone else will say it's always the most expensive because it's so different with every single house, right? But what you'll also see is the pendulum swings with the CEA. Right now, they've gone back and they've restricted coverage. They used to offer more, for example, for personal property, and now they've cut all those coverages back again. So we're seeing rate increases on earthquake, probably because of all the earthquake activity.
Yeah,
but
this
the
has been the
CEA,
most activity ever.
I know, right? And again, they're not making any money. I mean, the CEA literally can have zero money other than what it needs in its reserves. So when you see premium increases from companies that they're not a nonprofit, but they're not allowed to make a profit, if that makes any sense. You know that's just the money they have to be able to carry their claimed exposure.
So if you have a CEA earthquake policy, is that a good policy? Is that safe? Or should we get like another major carrier?
You know, I hate saying either way because it really depends. Sometimes you don't have the option, right? If you go to a private carrier and the price is cost prohibitive, get a CEA policy if it's affordable. Absolutely. Yeah. What would I prefer? I tend to like to have an actual insurance company because I feel that there's more behind it than that, right? You don't have any type of necessarily bureaucracy. You don't have any
Right.
necessarily issue with. You also have something called SIGA, which is the California Insurance Guarantee Association, which basically bails out carriers that go bankrupt to protect consumers. We're
Interesting.
not supposed to talk about it as a sales tactic, but it does exist. CEA doesn't have that protection. So there are some small reasons why a private carrier are actually better than the CEA. But again, it's a dialogue, right? And you have to
Right.
sort of dig in and find out what coverage is important to you. You might say, you know what? I must have my personal property insured for earthquake.
Right.
CEA is not going to give you that option. So it's kind of moot at that point.
I better check my CEA policy because, fire is one thing, but earthquake, I got a lot of people have, things that are breakable, right? Like if there's a major earthquake, I mean, most of my breakables are glued down with those glue things on the furniture, but if there's a big one, I mean, it's gonna go, right? So,
Right.
I guess one of the things, my takeaways from this is I think something I've got to do is probably spend more time with you and like really going through every policy. Look, we get the quote, we pay the premium. Who wants to read through 30 pages of policy information, which is now why with AI, which I've not done yet, but I'm probably going to do that. I can upload my policies to ChatGPT and say, take a look at this and tell me things I need to know to protect myself, right? I don't know. I'm just came to mind right now because this is such a challenging time for insurance, and it's probably not going to get any easier. I mean, let's face it, one big earthquake in LA, which we're past due, it's going to change the whole landscape then again, right?
Right. Well, it changed dramatically after the Northridge quake,
Hmm.
and it will, of course, change once there's another large quake again. Fortunately, we're in a situation where the pricing is expecting that, versus with the Northridge quake, the industry had no idea that there could be that level of damage that could be happening. We used to have earthquake policies, full policies with a 2% deductible, and it was an add-on to your home policy for $400 a year.
Wow.
This was not expensive. And this is what happened after the Northridge earthquake. All of a sudden, the industry said, wait a second, we can't afford to do this. And
Right.
then eventually the CEA came out, and then eventually the independent market came back. And you have today multiple carriers that offer just comprehensive earthquake policies. Are they
Right.
$400 a year? No. But are they solid companies with good coverage? Absolutely.
Right. Well, Carl, you are such a wealth of knowledge. I'm so glad we did this interview today. I'd like to do another one because this is a very important topic. And when you're paying tens of thousands a year for insurance for all different properties, it's challenging, right? So I appreciate you taking the time to meet with us today and discuss all this. And if you don't mind, I'd like to do another one with you so we can continue this conversation. Because my goal is to really help my buyers, my current clients. They don't want to sell their houses. They call me like, "Oh my God, my insurance premium went up four times. What do I do?" Of course, I send them to you. So I think it's important we just continue to give value to our clients and help them navigate through this additional aspect of living here in Southern California.
Absolutely. And it is really about value because, again, it's not a commodity where you can just, check off a box, have a policy, and everything is good to go. And it's just going to become more important that you're aware of what you have. And like you said, you can either read it yourself, try and, get it summarized through AI, or just have a broker do it. That's kind of our job.
Yeah.
Find one.
Being
If
aware
someone's
is
not
the
willing
most
to read
important
it,
thing. Being aware. Yeah.
being aware, right? And find someone that speaks your language, right? Because not everyone, like I said, there's good at everything and bad at everything, right? Find someone that's going to take the amount of time you need. Some people just say, just tell me what I need to know. And that's good enough, right? Some
Great.
people want to go through line by line, and you have to find someone that works the way you want them to.
Got it. Well, I appreciate you and your 30 years. And back 30 years ago when we were younger, we didn't have gray hair.
No, we don't. We
It's
certainly
funny because
didn't.
my hair does not look gray in this video because it's like basically all white. I don't dye my hair, but I don't know why it doesn't look all white in this particular video. So,
I was going to say, what are you talking about gray hair? Your hair is not at all gray.
well, take me out on this. This is really strange because again, I don't dye it, but right now it looks like it's black, which is really strange. Maybe I got some good lighting.
I was going to say, I want the lighting to make my hair look black again.
Carl, thank you for taking the time to visit with us today. I know you have another meeting very shortly. I so appreciate you and what you do for all the customers and your insights. This was really a great call, and I hope everyone who pays attention, anyone, this is for homeowners, potential buyers, this is valuable information because insurance is a costly part of living anywhere in the world, whether you're in Florida. I mean, every place has different disasters. Midwest has tornadoes. Florida has hurricanes. I was there for one of the hurricanes a few weeks ago. We have earthquakes. I mean, it's just fires, it's part of living. And part of my job with buyers is explain to them, okay, you're in a fire zone. And I tell all my clients, first of all, I said, LA's earthquake zone. So, and this is the truth. Basically, every street in LA is an earthquake fault. I mean, I know you know that, right? So anyways, thank you again.
My pleasure.
Again soon. Maybe after the election when people aren't so busy. And
I'm here anytime you want to chat. I'm happy to do it.
I appreciate it. Thank you, Karl.